this week could bring about some key turning points in European markets, particularly the euro, along with continental indices. We've seen a huge rally, relief rally, really, in European markets since the French election. We had seen back in the fall, after President Trump won the election, there was a concern that a populist wave could sweep across Europe, sweep out a number of governments, and put the future health of the Eurozone in jeopardy. However, what we've seen since is that we saw in Austria, and then in the Netherlands, and more recently in France, that the forces of people who wanted to stay in the euro ended up winning out. The Eurosceptics were dealt setbacks, and based on that, we saw a lot of the political risks surrounding the Eurozone easing a little bit. In particular, after the French election, we saw it really ignited a big rally in the euro when Macron won and defeated Marine Le Pen. And so after the first round, we had this breakaway gap here, a consolidation, and then on round two, we saw the euro rally again. So now, though, we're heading into the summer, and we're heading into a point where we've got this ECB meeting coming up. We could have some significant action in the euro, and here's why. The feeling was that now that Macron has won in France, and with Merkel leading by a big margin in Germany, there was a sense that at the beginning of the year that the ECB would stand pat through the whole year, get through all of these elections, and then look at tapering or easing back on stimulus in 2018. However, the political scene has shifted quite a bit in the ECB, and now there's been started to be speculation that, well, perhaps they could, instead of the one-and-done taper we had in April, perhaps the ECB could move tapering up from spring 2018 to the fall of 2017. Perhaps they could start to revisit their negative interest rate and start to trim that back up and move back to normalizing interest rates as well. So this is what people are looking for with the ECB meeting this week, either from a statement or from President Draghi's press conference, is any signs of less dovishness at the ECB, any signs that they may start to normalize monetary policy now that the political situation has somewhat stabilized. There's still some lingering risks out there. There's talk about Italy moving up its election from the spring of 2018 to the fall of 2017. There's a feeling that after the German election that people could focus back in on Italy's problems and destabilize its banking system. So they're actually looking at to ease some of this uncertainty about moving up their election. And of course, the Greece situation still remains out there and fluid enough for renegotiation, and anything could happen on that at any time. It's a country that's really, really struggling. So it's important to note that that could flare up again, whether it's the summer of 2017 or the summer of 2018. Remains to be seen. So what we're looking at here with the euro as we head towards the ECB meeting, we've had a pretty good run here, but we're starting to run into resistance here at this channel high near 112.90, starting to roll back over towards 112. If we break 112 would be a sign that we're seeing the euro starting to weaken. And what could make it do this? Well, for example, if the ECB doesn't come out with hawkish hands, there's been talk that because the oil price has come back down, that the ECB could actually lower its inflation forecast rather than raise it. If you don't have inflation pressures, that could ease the pressure on the ECB to do something sooner. They could leave their stimulus on longer. Technically, when we're looking here at the RSI, we see a left shoulder, a head, and a right shoulder. This is a head and shoulders top. Rare, but potentially bearish. It's showing a peaking in momentum and the potential for a correction. If 112 fails, next potential supports here around 111.20, which is a 23% retracement of this recent rally here. Further resistance on the upside in here is around 113.55. So significant action potential in the euro. Now, as we see movement in the euro, we could also see movement in some of the continental indices based on what we get of the ECB. One we're watching for in particular is the DAX, and here's why. DAX, along with other major indices, had a great run through the first part of this year, but look at this. It's starting to run out of gas. We've got a double top here forming at 12,900, and it's sliding back in a range. First supports in here around 12,475, 1,200. Look at this. We've got a much lower high high in the RSI, almost a negative divergence. This is telling us upward momentum slowing, potential for a correction. If the RSI breaks 50, would be a signal of a downturn in momentum. The other thing we want to keep an eye on in the Euro and European indices is also the UK election on Thursday, with results Thursday night and into Friday. So the focus on Draghi might last for about half a day, and then people are likely to shift to the UK election, because how the Conservatives do in the UK election could impact perceptions of how people feel the strength of the UK's bargaining position relative to the EU's bargaining position. A big win by the Conservatives could boost the UK's hand, it could boost the pound, it could impact the euro. On the other hand, if the Conservatives are dealt a setback and or Labour really picks up, then that could be seen as giving the EU an upper hand in negotiations and boost the euro. Particularly, we'll be watching for this in euro pound. This cross could be, the channel cross could be very important. We've seen in recent weeks, as the Conservatives had Conservatives, when they were doing well in the polls and just after they triggered Brexit, we've seen the euro had declined relative to the pound. So this is the euro going up and down. And as we've seen the polls tighten over the course of the election campaign, we saw the euro rally against the pound. We also, of course, was driven by the general euro rally on the French election result. We've seen this level off now in between about 87 and 88. 88's a big channel resistance here, and we had seen it was only breached briefly back in January. So if the Conservatives win, and we've certainly seen here on the momentum as well, RSI showing upward momentum, rolling over, correction possible. If the Conservatives win, and particularly if they win big, this pair could decline on the sterling rally. First support is back around 86 and the 200-day moving average. On the other hand, if the Conservatives are dealt a big setback, this could bounce back up. First resistance about 88 and then about 88.50. So keeping an eye on that. So overall, there's a number of factors that could move markets in Europe in the coming days.